Welcome back to PhatBear Pod. I'm your host, PB. It's a slow Tuesday morning. Bitcoin is still chilling at 82.5K, and the total market cap's holding steady at 2.67 trillion. That's a big, fat number, right? Sounds like we're all rich, except nah, it's just the same old whales hoarding sats. But the real actions in the 24-hour volume, 80.61 billion, up a spicy 62% in one day. One day. That's not a market move. That's a caffeine overdose. Bitcoin dominance, though, it's ticked up to 61.4%. Up because, surprise, surprise, the altcoins got absolutely smoked. Ethereum's down bad. Solana's skydiving from the top. And those random shitcoins you bought on a whim? Toast. The fear and greed index is still at a pathetic 24. We're 2 measly points from extreme fear. For the alt's performance, the top winners are Walrus, Curve DAO, Pendle, and Echelon Prime. The biggest losers are guns Neo, Mubarak, and Jupiter. Now, let's check what's brewing in the macro scene. Global stocks are tanking, and it's all because Donald Trump's got his finger hovering over the tariff button like it's a reality TV buzzer. Markets worldwide are sweating bullets ahead of what Trump's calling Liberation Day on April 2nd. Why the panic? Well, Trump's already kicked off this trade war with a 25% tariff on Canada and Mexico, a 20% hike on China, and now he's hinting at reciprocal tariffs on everyone. That's right. If your country taxes U.S. goods, Trump's ready to tax you back, like some petty playground grudge match. Economists are screaming that this could tank global growth by a full percentage point. Consumers are looking at $1,000 extra a year just to keep buying the same stuff, thanks to higher import costs. Businesses are freezing hires, delaying investments, and basically acting like deer in headlights. And now we can't even afford the alcohol to drink away our sorrow with this inflation. Enough about the macro news that can spike your blood pressure. Time for some crypto news. Nigeria has been a crypto hotspot for years, topping global adoption charts, while the Naira has been doing its best impression of a sinking ship. Peer-to-peer trading? Off the charts. Bitcoin as a lifeline against inflation? You bet. But until recently, the Central Bank of Nigeria was like, no bank accounts for you crypto degens thanks to a 2021 ban. Fast forward to 2025, and things are shifting. Nigeria is finally putting some meat on the bones of virtual asset regulation. The big news, the Investment and Securities Act 2024, signed into law in March of 2025. This bad boy officially classifies virtual assets as securities under the SEC's watchful eye. Virtual asset service providers have to register with the SEC, locally incorporated, with an office in Nigeria and a CEO who's not jetting off to Dubai every other week. Minimum paid-up capital? A hefty 500 million naira, about $553,000. Plus, they're slapping on strict KYC and AML rules. And don't even think about listing a token without the SEC's no objection stamp. Every coin's got to pass the sniff test. Next story, Goldman Sachs recently drops a bombshell, jacking up its 12-month U.S. recession odds to 35%. That's right, 35% chance we're all screwed, thanks to a toxic cocktail of rising tariffs and crumbling growth. They've slashed their 2025 U.S. GDP growth to a measly 1%, bumped core inflation to 3.5%, and pegged unemployment at 4.5%. Bitcoin is basically a high beta NASDAQ these days, dancing to the tune of liquidity, risk vibes, and real yields. The yield curve's inverting again, classic recession incoming signal, but the Fed's hands are tied because inflation's still lurking. No QE cavalry's coming to save us, folks. Bitcoin's facing risk-off pressure. Without the stimulus juice it usually guzzles. But not everything is all bad in the long term. A recession can force more fiscal spending, bigger deficits, lower rates, and that sweet liquidity flood to stimulate the economy again. Remember all that talk about Trump being pro-crypto? Well, it looks like he's putting his money where his mouth is, or rather, his family's money. World Liberty Financial held a $550 million token sale. And guess who swooped in like a crypto-savvy eagle? The Trump family. We're talking about a cool $400 million slice of the pie for them, which also means they're raking in 75% of the token sale loot and 60% of the operational income. Wild, right? This move is raising some serious eyebrows, especially when it comes to governance. I mean, the Trump family calling the shots on a DeFi project? It's got some folks scratching their heads and whispering about potential centralization issues. Who's really in control here? What does this mean for the future of the project, and more importantly, for the poor souls who bought into those tokens? Time for our DeFi segment. There's a project that's been absolutely crushing it lately, Hyperliquid. These guys are the current rock stars of the DeFi space. No doubt about it. We're talking daily trading volumes hitting a mind-blowing $4 billion. And get this, they've become the largest decentralized derivatives platform, snatching up nearly 60% of the market. Hyperliquid is now sitting at 14th among all derivatives exchanges in terms of open interest, clocking in at $3.1 billion. They're still behind Binance, but they're ahead of some old-school names like Deribit and even the derivatives arms of Crypto.com and BitMEX. This is the first time we're seeing a DEX go toe-to-toe with the big sex boys like this. They haven't quite cracked the code for institutional investors yet, and they're not at the level of the top-tier sex. But if their layer 1 ecosystem takes off, they could be a real DeFi powerhouse in the making. Remember how Solana was the undisputed king of the meme coin jungle for most of this bull run? Enter BNB Chain, stage left, ready to snatch the meme coin crown. These guys have been playing it smart. They've got their own memes playground called Four.Meme. Think of it as their answer to Solana's pump. Fun. But they're not just letting things happen organically. They're throwing daily meme coin competitions and even subsidizing liquidity for new projects. And get this, some of these memes are even making onto big leagues, securing listings on Binance itself. This meme coin mania is clearly fueling some serious action over on PancakeSwap, BNB Chain's flagship DEX. For a solid 2 weeks in March, PancakeSwap was the top dog for DEX volume among all those EVM-compatible chains. What's driving this resurgence? It's the memes, plain and simple. BNB Chain knows it, and they're embracing it. They even published their 2025 tech roadmap, reaffirming their commitment to the meme coins ecosystem. Next story, word on the street and on the blockchain, is that investors are increasingly moving their capital into good old reliable stablecoins, an increasingly interesting world of tokenized real-world assets, RWAs. Why the sudden shift? Well, all eyes are on April 2nd, when President Trump is expected to drop his widely anticipated tariff announcement. And you know what tariffs usually mean? Volatility, uncertainty, and a whole lot of market jitters. Some folks in the industry are even predicting that Bitcoin's lack of upward momentum might actually fuel the growth of RWAs, potentially pushing them to a $50 billion all-time high before the end of 2025. The thinking is that as RWAs become more liquid, they could attract a significant chunk of that massive $450 trillion global asset market. That's a huge pie, and even a small slice for RWAs would be massive. For our airdrop opportunity, we got Reactor, a brand new MetaDEX that's cooking up something interesting over on the Monad blockchain. What exactly is a MetaDEX? Think of it as a DeFi Frankenstein. Reactor is taking the best bits and pieces from some of the top dog in the game and mashing them all together into one streamlined platform. They're running an airdrop campaign on the Monad testnet with some Reactor points. How do you get your hands on these points? They've got a system where you earn points by doing things like swapping tokens, providing liquidity, and even referring your fellow degens. The more you engage, the more points you stack. If you're feeling a bit more like a farmer, earn points hourly based on the USD value of your position. For example, $100 worth of liquidity will earn you 20 points per hour. All right, crypto connoisseurs, that's the wrap up for this Tuesday's episode. Until tomorrow.